Welcome to Northwest Arkansas Investing Podcast, your go-to source for real estate investing in Northwest Arkansas.
Whether you're a seasoned investor just starting out, we bring you expert insights, market trends, and practical strategies to help you build wealth through real estate.
From buying and selling to property management and long-term investment planning, we cover it all so you can make smart, informed decisions in this fast-growing market. Let's dive in. Welcome back to Northwest Arkansas Investing Podcast. We've got Mr. Clinton Bennett here with us again. We just kind of wrapped up our first episode. Just getting to know him, getting to know kind of what he does, what he's kind of his upbringing and what got him into commercial real estate, and then a little bit about their merger with Focus Commercial Real Estate and kind of the team they built out there. So if you haven't listened to that yet, go back and take a look at that. But we just wanted to get into a quick episode talking a little bit more about market data, some trends that you're seeing, and really just kind of get a pulse on what you've seen over the last few years and how things have changed in Northwest Arkansas. And so thanks again for your time as always. But wanted to just hop right into, I think a big question that a lot of folks have that are specifically not in the area, maybe they're out of state looking to put money in Northwest Arkansas or get to know the market a little bit more. What are some of these, most people will know, nationally, Bentonville, they've heard of Bentonville and they've seen it in the Wall Street Journal. They've seen Fayetteville pop up in articles, best places to live every year and stuff like that. And maybe they've heard of Springdale and Rogers and kind of the things that are happening there. But for you, it could be across those four. It could be, in some of these other emerging sub-markets. But what do you see as some great opportunity coming up in 25 and 26 and beyond in Northwest Arkansas?
Sure. Yeah. And I may kind of answer that a little differently. Like when I think about where the commercial real estate market is now, and like what some of the trends have been, we're seeing, you get these groups that come in from out of town. They're seeing all the stuff in the news that you're talking about, the Wall Street Journal articles or the Milken studies. And I mean, we're on people's radar now, and there are a lot of people, there's a lot of capital that is interested in finding a way to get deployed in this market. Mm. And it's funny because, generally, and I think you're seeing a lot of this in the multifamily space. There are people with family offices or, private money or, I don't know where all the capital comes from, but there are people that come in from Chicago or Dallas or, Denver or you name it. They're coming from all over, and they will find their way to my office or others' office and be like, hey, we've got $30 million we'd like to deploy in Northwest Arkansas. And my general thought is, I don't think they realize how difficult that is to do.
Yeah.
Like, I think they think they're going to roll in with a bunch of cash and they're used to executing on deals in other markets this size much easier than this is a tighter market. It's harder to buy things. And you almost have to I may confuse people with the way I'm using these terms, but you almost have to buy your way into the market by paying a premium. Certainly you got to buy, people are wanting to buy commercial real estate, but they may be used to buying Class B office buildings at an 8 cap or whatever. Well, in some markets, you can buy Class B office they're giving it away. But we certainly do not have problems with office vacancy in our market. Our office market is very strong. And even in other similar markets where the office market's generally very strong, you may have people that are used to buying stuff for 8 cap, or maybe they play in the industrial space and they're used to buying for a 7 cap. Well, what we're seeing in Northwest Arkansas is, that may be a 6 cap or a 5 cap. And, they'll look at us and they'll say, well, look, for this quality of real estate, we can't justify, spending enough money and only getting a 5 cap type return.
Right.
Now I look on their different metrics and they look at, so I'm probably being a little overly simplistic, but cap rates are an easy way to talk about this stuff. But they'll look at it like, man, we're not paying a 5 cap for buildings like this. And so we've had a number of conversations with people that have a lot of capital that would like to spend it in Northwest Arkansas, but they just can't get comfortable with, what they perceive as the premium of what it takes to buy into the market. What we have seen, and I don't think you can bet on this long term, I think it's a risk, you might be able to in Northwest Arkansas, but I think it's a little bit of a risky strategy. But we have seen the people that are willing to almost overpay and kind of look at the market as though you're like, hey, they're not looking at where the puck is today, they're looking at where it's going.
Right.
And the people that are willing to come in and say, you know what, we're paying a little more than we wanted to, but we like the quality of the real estate, we like the story of this property, we like, the long-term prospects, so we're gonna pay a bit of a premium.
Yeah.
Well, what we've seen over the last 5 years or whatever is the people that were willing to do that have been pretty well rewarded.
Mm-hmm.
So I would say that's a real trend. I'm trying to bring this into like some concise points, but that's a real trend. Is like if you really want to buy and build a presence in Northwest Arkansas commercial real estate, it's not an easy thing to do. There's a lot of competition. I think a lot of the investors that come in are surprised by how many people are trying to do the same thing. The sellers aren't particularly motivated. Like they're pretty happy with what they've got. They're fine keeping it for whatever, or whatever amount of time. People have different life circumstances, so sometimes they sell. But for the most part, we don't see sellers that are very motivated. So, it's harder to buy into. The other big trend is, the complexity of the deals and the size of the deals has really changed over the past 5 years. I mean, it's changed, every year for the past 20 that I've been around. But it feels like we're seeing it more distinctively with every passing year. The deals are more technical. I think the stakes are just higher. So the players are more sophisticated, and with sophisticated players, you get sophisticated lawyers, and you get bankers that have got more contingencies, and you got the way the real estate game is played, or the process plays out, is a little more technical now than it was in the past, and it just feels like it's that's building every year. And there's part of me that's embraced, like I kind of enjoy it. So there are parts of it that make it harder. Like it's hard to get a real estate deal done now. I kind of look at that like game on, like that's fine. Like we're down with the challenge. Like we're ready to go try to figure out how to get them done. And I do think that the firms that embrace that and have the capabilities to manage that are going to be more competitive going forward. So not to get off talking about commercial real estate brokerage firms, but the market as a whole, there's a lot of competition. The deals are more complex. So it's just we're seeing an evolution, I think, in the skill and quality and technical ability of the players that are in the market.
And I think you spoke to it a little bit too. Is obviously there's not a lot of motivated sellers in the market because, especially if they've owned it for 5 or more years, they've really benefited from occupancy's super high and rates have continued to go. But and I think you can look at all the data that comes out. The Arvest Skyline report is one that we've talked on in a previous episode as well. But it's kind of crazy to see some of our vacancy rates compared to the rest of the country. And how would you not want to take a look at that as an investor outside? But as far as rental rates and like pricing that you see here, how do you see that compare to are there other markets similar out there that are at our size that are seen?
No, I think we're higher. I mean, I don't want to speak to that with any real confidence because I don't do a lot of business in other markets.
Sure.
But what we have seen from the comments of clients that deal in other markets and tenants that occupy space in other markets, they're usually pretty surprised at how expensive real estate is in Northwest Arkansas. So, the lease prices for new spaces. I've had this comment periodically for 20 years. I've had some regional real estate director for, company X come into town. Let's just call it like a fast food user. And they'll come into town and they'll be like, okay, we need to buy the best acre lot. I'm like, okay, well that lot, in 2008 was, $20 a foot. Now it's $40 a foot. But they would always, and whatever year it's been, they're like, holy cow, man, like that is a lot. Like we could, that's what it costs, to buy in a, rapidly growing suburb of Dallas or, right outside of Atlanta, like a big mature market, like with really established demographics. Like we're not paying that much in those markets. And I've always just kind of felt like, look, man, I don't set the prices. I just try to help these guys sell it. Like, if you don't want it, there'll be somebody else that buys it.
Yeah.
And you can't tell somebody that, but the reality is that's how our market expands. And it doesn't really matter to me if you're talking about industrial or office or retail, land. There are users that need a location, and those people will show up and they're like, golly, man, this is more than we had expected to pay.
Yeah.
But we've got whatever this business initiative is, we need to get that going. We need real estate to get that going. And so, gosh, we're going to have to pay a little bit of a premium, but we'll do it.
Yeah.
And so the way our market's grown, there's just been enough of that it keeps expanding.
Yeah. We had Tom Allen on a while back, and it's funny you mentioned that because he said kind of the same thing. Obviously he does a lot with Miss Hunt, and Mrs. Hunt obviously has done a lot here in the Pinnacle area. And he mentioned kind of in a lot of those meetings, it's beforehand, the preliminary, before they built the buildings, they're like, we think we can get this, and then they build it.
Yeah.
And they, end up throwing out some, what he would say are outrageous rates, and they keep getting leased up at these rates that they wouldn't have expected.
Yeah.
And so that just keeps pressing up because it's in, especially in prime locations where there's a ton of demand and not any supply.
I listened to that episode, and he's right. I love Tom. Tom's been a great friend through my career. And he's right. But one thing I kind of want to clarify, the way you said that, it can sound to someone listening from the outside in as though the developers are making some wild profit. And the reality is, I don't think they are. The cost of construction, the cost of development, the cost of all these layers that it takes to really deliver a new building. By the time you do that and finish out the office space, I don't know what their rents are in the Visionary building, but I'll just say call them $40 a foot just for a swag. I should know that number, but I hadn't checked them lately. But call them $40 a foot. It's not like Miss Hunt or Tom or the partners in that building are making some giant windfall.
Right.
They've taken a lot of risks to deliver those buildings, and sure, they're making a return. But the real money's made on those on the next flip of the lease, or at least that's what we've seen.
Right.
But yes, the market complains a little bit, but it seems to absorb the increasing prices.
Yeah, absolutely.
The equity has to be, like you said, you have these out-of-state players that are coming into the market that expect, it's Arkansas, we can get these pricing, but it's, similar to Dallas or more, but they have to be okay getting that 5 cap return today. If the equity is patient enough, then you just may get the type of returns from as a 7 cap buy, because your rents go up more than what you expected. But, for the right people, they're okay making, shorter returns where it's almost a bet on the future that, yes, I make it. There's a lot more upside. So if you buy right, you can, as long as you're financing right, you can pivot and save yourself there. So I guess what I'm trying to say is be okay not having those high returns. If you're really wanting to get in this market, then one, you're getting the experience, you're in the deal, but also the market may just be more favorable 5 years down the road. Like you said, every year it seems like, man, you want how much? And you're paying this much, but it just keeps continuing. So it's hard to say that it'll continue at that pace, but we'll see.
I agree with you 100%. And that is a risky statement to say it'll continue at that pace. It kind of feels like it. It has been. Maybe it will continue to. But I agree with you 100%. The people that have been willing to take the risk and go ahead and buy deals where, the returns may not feel great day one, they've really been rewarded because the rents have grown faster than they expected. And, the comp prices have grown faster than they expected. And so all of a sudden they find themselves in, 2 or 3 years. They might have thought it was going to be a 10-year hold, but they might find themselves, what we've seen is you get 2 or 3 or 4 years down the road, it's like, holy cow, this thing's gone up 20%. And so we're seeing some people sell.
You said, and you mentioned it too, development, it seems like it's gotten harder to develop. And it has a thing, that comes with, like you said, there's challenges on the development period. You have the negative interest period, the finance period where you don't have any renters yet. You're not fully leased. So you do have cost of construction's rising. People who have this land that want high prices, and now we're having some infrastructure, problems too. So it's not a walk in the park to develop.
No, it's not. And I made a comment earlier that I think ties to this. I want to circle back on the words. I was talking about how few sellers there are. With that said, there are some people that have owned these properties for a long time, and they're like, it's going up a lot, and it's probably going to go up more, but I'm pretty happy with this appreciation that I've seen. So, yeah, I will go ahead and sell. And, good luck to the buyer. Hopefully he makes some money. So there is a contingent of people that are kind of, life changes, or maybe they're retired, or maybe they're moving, or whatever, where we are seeing some sellers. And I think some of them, it is because, people talk about passive income in real estate, like it just doesn't exist. I mean, unless you're investing as an LP partner, it does not exist. And I think people, even with really high quality real estate that has, high quality professional management, some of them are like, I'd rather just sell and do something else with this cash.
I think there will always be that. And, like you said, there's always going to be death, divorce, the typical stuff in real estate. One question I had for you, though, when you're evaluating deals or you're advising clients, like what are some key metrics that you're looking at for?
It's going to be overly simplistic, but yeah. I like looking at deals that are less than the cost to replace them. Mm-hmm. So if you're looking at a flex warehouse building, like I want to buy it for less than it would cost to build a new one. If you've got tenants in there, I want them to be at a rent amount where if they leave, you're not really necessarily upset about that. You can go release the space.
Yep.
And you want it to be in a spot where you think this is maybe ancillary to the other two, but I like to say, you want to put yourself in a position to get lucky. I like to have real estate that's in good locations, kind of in the path of growth. If it's got some problems, you can deal with that, but you price it in. But generally, the way I look at it and the way I advise clients is like, look, you want to see yourself getting into something that's you're getting a basis that's less than it costs you to build, and you want to have a really clear path to raising the rents and releasing it if you lose a tenant.
Absolutely. So it sounds like understanding replacement cost, number one, is important, but also maybe even vacancy rate is something that you're looking pretty well.
Yeah, I would say, and there's not a great way to answer this question. If anybody tells you that they know it, is not telling the truth. If you're looking at buying anything, in my opinion, I shouldn't say the most, but I think one of the most important things is knowing what you can, your tenants that are in there, what is the next turn of the rental rates going to look like? What is the finish out that's going to, for you've got the cost of turning apartments, and you can kind of define that pretty well. Well, in an office building, you don't know. A tenant may move out, and you might have to spend $120 a foot to remodel that space. Uh-huh. So there's not a right or wrong answer, but you have to have enough market knowledge to be like, to have confidence that you can predict what it will release for, what your likely, refit costs will be, and what your likely downtime will be. Because when you put those variables in your financial model, it can swing it one way or the other in a big way. And the other part of that is, the other layer of that is, not everybody's cut out to play in this game, because there's just a lot of risk. Sometimes you may have a great space that just doesn't lease for a long time. Yeah. You just didn't get the right person. There's some, luck can make you look like a genius or a fool on some of these deals.
Yeah, absolutely. I love that. I think, that's a great point. I think it's easy for a lot of us younger guys to look back or look at kind of, a lot of these guys that have owned a lot of property in Northwest Arkansas for a long time. That you see the joke, like they bought it for 3 peanuts and a raspberry, and now they're going for 6 caps or less in good areas. But again, it's putting themselves in positions where they can get lucky and right location, the metrics make sense, all that good stuff. So it's even buying it right on their end, I think is important. One question, just as we wrap up this quick market insights piece, as far as different sections of the market, multifamily, office, industrial, any others. What are you most excited about in Northwest Arkansas moving forward?
Well, that's a tough one to answer. I mean, the whole market is really exciting. I think it's going to be fascinating to see. It's funny, I was listening to Tyler Overstreet as I was driving in here listening to your episode that just dropped. He was talking about medical. I think, medical is going to be a major shift for all of us. Like, I don't think we recognize what the demand. It's going to take a while for that demand to spin up, but it's happening. So I think medical is going to be really interesting. The demand for Class A office continues to surprise people. I shouldn't say I'm surprised, but everybody's pleased with how that just continues to grow. And so we do have this real tranche of Class A office buildings, which used to we had one or two. Well, now we've got some real Class A buildings, and more coming online. And what's happened there is now we got a real Class B segment, which is in a Class C. Like we're maturing as a market, so we have these different classes, different options. So, I think I'm just excited to see us mature as a market. I mean, we do have a real Class A office segment. We got our industrial. If you look at our industrial buildings, the industrial buildings that are now coming online are real Class A industrial buildings. So there's an evolution that's going on. I think most of it is probably not going to be that exciting. I shouldn't say. I think I find the medical particularly exciting. I think the retail is, it's hard to develop retail, but we've got some cool properties coming online. We do, I hate to plug our listings necessarily, but we do a lot of work with the high street guys, and the work they're doing around Johnson and the Middle District is fantastic. There's a lot, the group that's working on Drake Farms, there's some really exciting. I guess the quality and the mix of uses with development is fun to see that coming. So I feel like I've kind of rambled a little bit.
No,
there's a lot.
That's great.
Yeah, no, I love that. I think, like Tyler Overstreet said, there's a lot of city changes that are going to be happening and have been happening even in the last 5 years, 10 years to kind of accommodate the growth and kind of continue to do some great things. So I think there's a lot to unpack here on what we talked about there, and we're just thankful for your knowledge, thankful for your time. I know it's valuable, and just kind of your insight on what you're seeing in the market, what you're excited about, and where can listeners get to know you or find you if they want to reach out? Sure.
Yeah. Well, no, thanks for having. I enjoy your show and appreciate you having me on, and have enjoyed the visit. We're Focus Commercial Real Estate. We're pretty easy to find. You can just Google us, but it's focuscregroup.com. And, I've said my entire career, we're not hard sell people. So if somebody just wants to talk about commercial real estate or visit a little bit, feel free to call, and happy to meet and talk about what's going on in the market.
Awesome. Clinton. Yep. Well, Clinton, we appreciate your time as always, and we're grateful for it. So
yeah, thanks guys.
Again, thank you guys for tuning in. I'm going to go ahead and list some sponsors off here. We're going to start with Whinstone Private Lending. This episode is brought to you by Whinstone Private Lending, one of the top private and hard money lenders now serving Northwest Arkansas. Whether you need short-term capital for a flip, a bridge loan, or creative financing, they've got you covered with very flexible products to fit nearly any deal, including 100% financing. What sets them apart is their deep expertise, fast response times, and ability to think outside of the box to help investors like us close quickly and efficiently. If you're looking for a real lending partner, check out Whinstone Private Lending. Link is in the show notes. Our next sponsor is Advantage Title and Escrow. They're a local company. They do great work. Specifically, Kayla Phillips. I can speak personally on this sponsor because I use Kayla for all of my transactions. It's been 2, 3, 4 years now, and Kayla and I have done a ton of deals. We probably do between 65 to 80 deals a year together. And they do a great job. The SOPs, so systems and processing that they have over Advantage Title is just incredible. Clients love it. They do a great job from start to end communicating. When I give a deal to Advantage Title and Escrow, I know that it's going to be taken care of. There's no second guessing. I almost am able to treat them like a second transaction coordinator to my transaction coordinator that I already have. I know that they're going to handle the systems and processes correctly, as an agent, as a homeowner, as a buyer or seller. They do an incredible job of handling a transaction and communicating throughout the process. They do a great job with communication, especially Kayla Phillips over there. I would highly encourage you, if you're looking to close on a home, buy a home, if you're an agent listening, to use Advantage Title and Escrow, specifically Kayla Phillips. So you're going to reach Kayla best at 501-358-1601, or you can email her, Kayla, Cayla, at goadvantagetitle.com. Advantage is ADVANTAGE title.com. Banks are about community, and Century Bank of the Ozarks has been your community bank for 131 years. That's over a century, since 1894. They've been helping neighbors build homes, grow businesses, and plan futures. Because they're locally owned, your loan approval happens here, not miles away. Visit their locations in Fayetteville and Mountain Home, Arkansas, as well as Gainesville, Theodosia, Bakersfield, and Ava, Missouri. Century Bank of the Ozarks, local bankers make local decisions since 1894. Member FDIC and equal housing lender. If you enjoyed the show, make sure to give us a follow on your favorite podcast platform so you never miss an update.
Don't forget to connect with us on Instagram, Facebook, and LinkedIn for more real estate insights and behind-the-scenes content.
Have a question you want us to cover? Send it our way. And if you're interested in sponsoring the show, visit NWAinvesting.com to get in touch. Thanks for listening, and we'll see you next time.